Back again with the market forecast. What we are looking at right here is the XAUUSD, which is gold. So I am on the 30 minutes time frame right here. But as I always say, guys, we can never start analyzing the market from the lowest time frames without understanding the bigger picture of the market. So to understand the bigger picture of the market, we have to start analyzing from the higher time frames. So the higher time frames are the ones that gives us clues, or they give us direction of the market. They give us the clear picture of where the market is more likely to go. So when we scale from the higher time frames to smaller time frames, when we get to the smaller time frames, we will be looking for sells or for buys depending on what we saw on the bigger time frames. Depending on what the bigger picture has told us. So what I have to do right now is to choose the higher time frame. I will choose to analyze the daily time frame. So here on daily time frame, here on the daily time frame, I can already see what is actually happening. On the daily time frame, I can already see what is actually happening. So this is what is happening on the daily time frame, right? I can see that the market is trying to form a reversal structure, of which that reversal structure is an M formation. An M formation is something like this. This is an M formation, right? Because I can already see that we have that double top right there. We have that double top right there, of which that double top right there is this type of double top. So this is why I'm saying this is an M formation, because what happened on the left hand side right here will have to be repeated right here on the right hand side. So what happened on the left hand side will have to be repeated on the right hand side. So what we have to do right now is to mark our highest highs, which is that double top right there, and then mark our lowest low, which is this neckline right here. So we have marked our highest highs and we have marked our lowest lows. So this right here is our playground. So this is where the market is playing, right? So what I'm expecting from this market is for this market to break this level right here. This is what I'm expecting. I'm expecting the market to break these levels right here to continue moving to the downside, because what happened on the left hand side will have to be repeated on the right hand side. Let me show you quickly what I am talking about when I mean what happened on the left hand side will have to be repeated on the right hand side. I understand that the market always repeat itself. So what is happening here has been done previously. The market has done what it is doing here previously. So if I can take my bars pattern from these levels right here, let me just take it from these levels to maybe these levels right here. We will start to see what is actually happening when I mean the market will always repeat itself. So we can see where I took this from, right? I took this from these levels, right? And then I am taking it onto our current market movement. You will see that the market repeats itself. So as we can see, we can already see the similarities, right? We can already see the similarities. So this is what is happening on gold. Gold is just repeating what it did previously. As we can see, this is exactly what happened previously. This is exactly what happened previously. We can see the similarities, right? We can see the similarities. So this is why I am saying what happened on the left hand side will have to happen on the right hand side. So what we expect from this market is for this market to break these levels, continue to move to the downside, maybe until these levels right here. If the market doesn't reach these levels, we expect it to reach at least these levels right here, you know. So this is what I am seeing on gold, you know. So now, because we have seen the bigger picture of the market, we have seen where the market is more likely to go, we can now just scale it down to the lower time frames. I can just go on to the 1 hour time frame just to see what is actually happening on this current market movement, you know. uh, so the market failed to break that neckline right here, right? And the reason why it failed to break that neckline is because of this structure right here. I can already see that we had that structure, which is the reversal structure, you know. So this was an inverse head and shoulders, because I can already see that we had that uh, left shoulder, and then the head right there, and then our our left I'm sorry, our right shoulder, right? So I can already see that this was actually what happened. This is actually what happened. We can see that that is a clear reversal structure, you know. So the market pushed to the upside until it completed the 90% of that structure, you know. So if I can scale it down furthermore onto the let me just go onto the 30 minutes time frame. We can already see what is actually happening right here, you know. We can already see what is happening. So we had that nice falcon pattern right there, you know. We had that nice falcon pattern, which has been broken, you know, which has been broken below. So we already completed the 90% of this structure. We had already completed the 90% of this structure. So what is happening right here right now, I can see the market has broken. So anything that is broken in the market has to be retested, you know. So we might be expecting the market, we can already see that this is a continuation pattern. I'm expecting the market to continue pushing to the downside, you know. So what I have to do right now is to maybe scale it to the 15 minutes time frame, but I don't usually go on to the 15 minutes time frame, you know. I go on to the 15 minutes time frame just for entries only. I don't analyze the 15 minutes time frame, but because of this thing right here, which this is a continuation pattern to the downside, right? I can already see that we have our first touch there and then our second touch there, right? We also have our first touch there, second touch there. So we expect our third touch. We expect our third touch right on these levels right here. So after our third touch, we will start seeing the market maybe shoot to the downside, because we already saw on the bigger time frame where the market is more likely to go, you know. So on this market right now on gold, I will not be looking for buys. I will be only looking for sells, you know. I will only be looking for sells. So this is a continuation pattern. So this is what happens on continuation patterns. The market will move impulsively to the downside and create something like this, right? Create something like this. So this will be our continuation pattern. This will be our continuation pattern. This is actually what is happening right here, you know. This is what is happening. So this is what I'm seeing on gold. This is what I am seeing on gold. We saw on the daily time frame where gold is more likely to go, we already saw on gold why the market is more likely to go. So we actually saw that gold is just repeating itself, right? We saw that gold is just repeating itself. So that gold is just repeating itself. The market will always repeat itself, Market will always repeat itself. So this is what is actually happening on gold. We can see the similarities.